Hello and welcome. Today we're diving into the new Income Tax Act 2025, and we're going straight to the absolute core, the very heart of the entire system, Section 4. This is the single provision that gives the government its power to collect tax.
You know how it is, right? Every year, the union budget comes out, and we all listen for the new tax rates. But have you ever stopped to think, what actually gives those announcements the force of law? How does a number and a speech become a legal obligation for you to pay?
Well, it's not magic, as you might guess. The answer actually lies in one foundational section of the Income Tax Act itself. It's the linchpin that makes the whole thing work. So let's get right into it and break it down.
All right, so here's our game plan. We'll look at why this section is the heart of the act, decode its language, see a real-world example, cover some practical compliance points, and then I'll give you 4 key takeaways to remember.
Okay, first things first. We need to understand what we even mean by a charging section and why it's so incredibly important in any tax law.
Think of the charging section as the engine of the entire act. Seriously, it's the one provision that grants the government the legal authority to actually levy and collect tax. Without it, you could have 1,000 pages of rules on how to calculate income, but they'd be completely unenforceable. The charging section is what gives the law its teeth.
So in our Income Tax Act, Section 4 is that engine. It's the keystone. Imagine an arch, right? On one side, you have the Permanent Income Tax Act. That's the how to calculate part. On the other side, you have the Annual Finance Act. That's the how much to pay part. Section 4 is that crucial piece right at the top, the keystone, that locks them both together. It connects the permanent rules with the annual rates.
Now take a look at this. On the left, you've got the old Section 4 from the 1961 Act. You'll notice it talks about the assessment year and the previous year, the year you earn and the year you're assessed. It works, but it can be a little clunky. Now look at the proposed 2025 Act on the right. See how much cleaner that is? It just uses one term, tax year. This is a deliberate simplification designed to make the whole process more straightforward.
All right, so let's take that new simplified text from the 2025 Act and really pull it apart, piece by piece, to see how it functions.
It's amazing, really. This whole process is packed into one sentence that works in 4 distinct steps. First, where any central act enacts, that's pointing directly to the Annual Finance Act. Second, that income tax shall be charged for any tax year, that sets the time frame. Third, at any rate or rates, that confirms the tax slabs come from that same Finance Act. And finally, the fourth and most important part, in accordance with and subject to the provisions of this Act. That's the link. It connects the rates from the Finance Act back to all the computation rules in the main Income Tax Act. It's beautifully efficient.
Okay, that's the theory. But let's be honest, nothing makes tax law clearer than a good old-fashioned practical example. Let's walk through one.
So let's take a professional, say for the tax year 2026-27. After all the calculations under the Income Tax Act 2025, figuring out professional income, capital gains, all of that, their total income comes out to 17 lakh rupees. This is the first piece of the puzzle.
Okay, so we have the income, 17 lakhs. But the Income Tax Act doesn't tell us the rate. For that, we need the other law, the one Section 4 points to. That's the Finance Act for 2026. Let's just assume for our example that the Finance Act says income in this bracket is taxed at 30%.
And boom, there's the connection. Section 4 is what lets us take that 17 lakh rupees, apply the 30% rate from the Finance Act, and arrive at the final tax payable, 5,10,000 rupees. See how Section 4 acts as that bridge? It connects the income calculation to the tax rate.
Right, so that all seems pretty straightforward. But what about the real world? What happens when things don't go as smoothly as planned? This system raises a really important practical question.
What if the budget gets delayed? What if the new Finance Act isn't passed by April 1st? Does everything just stop? Does nobody pay tax? It's a valid question, right?
Thankfully, the lawmakers thought of this. There's a safety net built right in, Section 530. It's brilliant. It basically says if the new Finance Act is delayed, you don't have to worry. The law will apply either the previous year's rates or the rates from the proposed bill, whichever one is better for you, the taxpayer. This is a fantastic provision that ensures continuity and protects the assessee.
So, let's just quickly go over some common misunderstandings to avoid. First big one, the tax rates themselves are not in the Income Tax Act. They come from the Annual Finance Act. Section 4 is just the link. And remember, this applies to everybody unless there's a specific exemption. So, as a professional, you absolutely have to be on top of both the Permanent Act and the Annual Finance Act.
All right, we've covered a lot, so let's boil it all down to the 4 most important takeaways about Section 4.
Number 1, Section 4 is the engine. It's the charging authority that makes everything else work. Number 2, it's a 2-act system. The Income Tax Act is the how, and the Finance Act is the how much. Number 3, the 2025 Act simplifies things with more streamlined language. And number 4, there's a built-in safety net, Section 530, so the system never breaks down if there's a delay. So I'll leave you with this final thought to chew on. We've seen how the new act is pushing for simpler, clearer language. How do you think that's going to play out in the real world? Do you think simplifying a core section like this will lead to less litigation down the line? Or will people just find new things to argue about?
And that wraps up our look at Section 4. I hope you found that helpful. If you did, please do like, subscribe, and share it with anyone else who might find it useful.
And just a quick reminder, this is an AI-generated explainer for educational purposes only. It isn't professional advice. Tax laws can and do change, so please always consult with your professional advisor before making any decisions.